The economic woes for China continue, with exports in the world's second largest economy falling 5.5% in August, following an 8.3% drop in July. So what's next for China? I'm joined now by Raymond Chan, the Chief Investment Officer, Equity Asia Pacific at Allianz Global Investors. And Raymond, it's great to see you here. Welcome.
Thank you.
So your reaction to the data out of China?
Well, certainly it's bad, no doubt about it. But I think compared to the couple of months number, see a little bit of improvement, i.e. less bad. But I think you have to look at things, in the regional perspective. If you look at Taiwan, if you look at Korea, all the exports growth have been coming down very sharply. So it's not only a Chinese phenomenon, it's actually a regional phenomenon. And if you look at the bigger picture, certainly the global trade has not been there. And that actually explains why the export performance has been bad.
All right, I want to pull up a chart of the benchmark Shanghai Composite. Look at the volatility over the past month. Now, stocks rose on Tuesday, up about 3% on hopes that the People's Bank of China will step in with a stimulus. Do you think that's coming?
I hope not. I think the Chinese government already made a mistake in June to support the market. And I think the government actually should leave it to market forces. Having said that, I think the market has come down quite a bit already. The market may have a little bit more downside. I'm talking about the China A, given the valuation is still on the higher side. I think if you look at the economic policy, there's no doubt there will be more stimulative measures to come out. The reason for this is, if you look at the real interest rates, it's still at very high level, 400 basis points or above. Inflation's been coming down. There are a lot more incentives or room for the nominal interest rates to come down faster.
And I also want to talk about the Yuan currency. Of course, the central bank in China saying today that foreign currency reserves fell $94 billion in August. Now, that, of course, was the month where China made that surprise move to devalue its Yuan currency back on August 11th. It shocked global markets. What are some things investors should know about the Yuan for the rest of the year?
I think there's still more downward pressure for the RMB, to depreciate more. But we have to understand why the PBOC, the Central Bank of China, adopted this devaluation, on August 11th. I think the whole objective there is really they want to internationalize the currency. They want to have RMB into this SDR basket, follow the IMF, recommendations. So i.e. they want to have a more market mechanism put in place for the exchange rate. So I think by that actually means the currency has to depreciate, and that's what happened.
In terms of opportunities in China, do you think now is a time to get in? I mean, you have said that you don't think that Asia is going to see a crisis similar to the one back in 1997, but are there certain sectors that you like?
Yes. Well, first of all, I think the China A, to me, is still a little bit more expensive, although it's come down. If you want to look at the Chinese stocks, you should look at China H, i.e. those stocks listed in Hong Kong, because they trade at 50% discount to the China A. So basically, it's much cheaper to buy the China stocks, through Hong Kong. If you look at the sectors, I think there are a couple of sectors actually we're really interested in. One is the insurance. The insurance companies actually still making very good, penetration into the insurance market. i.e., the penetration rate has been very low, and they are making a lot, more growth, there. And the other area actually we really like is the industrial automation, companies, because the Chinese labor market is expensive and companies have to spend more on automation.
All right, Raymond, we'll leave it there. Thanks very much for coming in.
Thank you.
I'm Scott Gam, and you're watching The Street.